A surprise rise in U.S. unemployment in Friday's jobs data for February saw the price of gold spike to a fresh all-time high in spot market trading, coming within $5 per troy ounce of $2,200 and breaching pound 1,700 for UK investors, while topping €2,000 in euro terms for the first time ever, as betting grew that the Federal Reserve will start cutting dollar interest rates in June. Peaking at $2,195 per troy ounce as London's physical market closed, leaving US Comex futures and options trading to set the price. The precious metal had earlier set its fifth London 3 p.m. gold benchmark record in a row, a run of new all-time highs not seen since the COVID crisis of summer 2020, above $2,171. Gold had earlier spiked to a then-new record high of $2,185 in London spot trading after the US Bureau of Labor Statistics said the world's largest economy added 250,000 jobs to non-farm payrolls in February, beating analysts' consensus forecasts by more than one-third. But with average wage growth slowing unexpectedly, the BLS also revised down the jobs growth it had previously reported for January and December, slashing that two-month total by almost 25%. Together, that pushed up the US unemployment rate to 3.9%, its highest in more than 2 years. Betting on a June rate cut from the Federal Reserve grew towards 4 in 5 positions in interest rate futures contracts, up from 3 in 4 before today's non-farm jobs report. And the market's consensus bet for Christmas 2024 moved to predict that Fed rates will end the year below 4.44% per annum. That's down by 0.17 points from Wednesday last week, when it briefly matched the US Central Bank's own end 2024 forecast of 4.60%. Respect the cold-hearted rally in gold prices, says a trading note from strategist Nikki Shields at Swiss Bullion Refining and Finance Group MKS PAMP. It's so clear there is a persistent stealth buying program in place, give price action, because all the known flows this past week have been sales, she says, pointing to gold ETFs plus further physical selling and also mining producer hedging to lock in these new record prices for future output. The US dollar fell Friday for the fifth session running, hitting its lowest trade-weighted DXY index level in 8 weeks. New York stock markets rose alongside gold, as did bond prices, edging down longer-term borrowing costs to their lowest in a month at 4.09% per annum on 10-year US Treasury debt. 10-year TIPS yields, the so-called real rate strongly correlated against the gold price across many periods in recent years, ticked down to 1.80%, its lowest since the end of January. So-called cryptocurrency Bitcoin also scored another all-time high, just topping Tuesday's peak and coming within $70 of $69,000 as BTC ETF trust funds continued to attract inflows. Please like this video and subscribe to our channel.